Benchmark indices close higher ahead of the interim budget. Broader markets outperformed the Nifty. All sectoral indices close in green. And Parliament's budget session begins. President Murmu, while addressing the nation, says Make in India, Atmanirbhar Bharat are now our strengths. Prime Minister Modi warns against democracy disruptions in the Parliament. And Maruti Suzuki's third quarter profit rises 33%, beats analyst estimates on the back of higher sales and an increasing share of sports utility vehicles. Ambuja Cement's third quarter standalone results miss estimates on lower volumes. Profit grows by 39%, margins expand by 368 basis points. Two companies to file IPOs. Northern Arc Capital plans to raise 2,000 crore rupees through the offer, while Blackstone-backed Aadhar Housing to refile IPO papers with reduced size. The company plans to raise 4,000 to 6,000 crore rupees. These are NDTV exclusives. Hello and welcome. You're watching The Reporter on NDTV Profit. I'm your host, Smriti Chaudhary. As always, we bring to you the market headlines along with national and international newsmakers. Now, before we move on to the show, let's see how the markets fared today. I have my colleague Neeraj Shah, who's joining for a quick market wrap. Neeraj, how did the markets fare today ahead of the budget tomorrow?
Well, strong day for the bulls ahead of the budget, ahead of the FOMC, I must say. A very strong move, one that was unexpected, much as yesterday's fall was unexpected. And banks leading the way, 1.4% up, courtesy HDFC Bank. But the Nifty and the Sensex were today punctuated by gains to the auto pack and the pharma pack. Frankly, that was it. Bring up the mid-cap and the small-cap indices once and just see what's happened there. Look at the market breadth. The advanced decline ratio was solid. It was looking very, very strong for a better part of the day. And this explains why. 1.6% gains for the mid-cap index and over 2% for the small-cap index. Just shows you the kind of gains that happened today. Bring up the market breadth very quickly before we get to the individual movers. And you can see how strong it stayed throughout the trading day. Good, solid show. Bring up the heat map, a peppering of green, very little red. I'll start off with the red because there's only one stock worth talking about, Larsen & Toubro, down 4% after the results. This might also get corrected at some point of time because frankly the numbers were not so bad as well. Let's wait and watch what happens going ahead. But pharma and auto, look at the top list, and there is Dr. Reddy's, there is Sun Pharma, there is Divi's, and there is Cipla from the pharma pack. And then there was auto. So Eicher Motors, Tata Motors amongst the gainers. There was Mahindra & Mahindra. There is Maruti up 2% after the numbers. So strong showing today. Dr. Reddy's, Maruti, as well as Sun Pharma were all result reactions. So very, very solid moves there. Then if you just look at the individual movers within that index, beyond, like for example, Nifty Pharma, if we can pull up and just show you what happened there. Just one index that I want to show, the Nifty Pharma gainers. Look at that. Dr. Reddy's, Gland, Biocon, Laurus Labs, Lupin, everything had a great move. So just goes to show how strong the moves were. And even at the broader end of the spectrum, just quickly, the last thing that I want to mark are some of the stocks that would have done well at the mid-cap and small-cap end of the market. So if we can get up the BSE 500 gainers or the top three movers on either the BSE mid-cap, BSE small-cap, what have you, you will see what I'm talking about. Some pretty strong moves at a lot of broader end of the spectrum stocks. Voltas, not so bad numbers. The stock market had gone into the results short, and that stock recovered. PNB on the fundraise recovered. Gujarat Gas about 4.8% higher, as also M&M Financial a result reaction, and Concor about 2.5%. So strong showing for a clutch of names in the session today. All in all, just the kind of data the bulls would have wanted ahead of the budget.
Thank you, Neeraj, for that. We saw Maruti closing 2% higher today, and that's on the back of profit beating estimates, and it surged by 33%. Revenue also grew and margins expanded. My colleague Vinay joins us to give a snapshot of the earnings. Vinay, tell us the key highlights from the results.
Yeah, so Maruti Suzuki's profit beat estimates with a 30% rise due to higher sales and increased share of SUVs. Sales rose 7.6% to 5.01 lakh units in the quarter. And within those sales, if you see, the utility vehicle sales rose 60%, 1.5 lakh units. So you can see that clearly the utility vehicles shares have risen in the overall sales, and it is clearly benefiting the company. And if you look at a combination of higher volumes and rise in average ticket prices has also aided the company's performance in the quarter. Revenue rose 15% in the quarter, and that is also driven by the SUV sales, and margin expanded to 11.7% compared with 9.7% like last year. So this margin expansion has been aided by lower commodity costs. And if you look at the highest ever quarterly exports, that has also aided the margins of the company. If you look at the lower commodity cost, how they have impacted the company's financials, the material cost as a percentage of sales fell 170 basis points to 74%. So that is how the companies have fared in the quarter, and a much better looking future for the Maruti Suzuki company.
Thanks, Vinay, for that. That were the results of Maruti Suzuki. But big day for results. Ambuja Cements also came out with its third quarter numbers, and it missed estimates on lower volumes. Standalone profit rose 39% year on year. Let's listen into what CEO Ajay Kapoor has to say about the earnings.
Ambuja has achieved stellar financial results marked by revenue growth and operational efficiency. Our net profit has witnessed a remarkable surge, reflecting the company's resilience and strategic initiatives in a dynamic market environment. The year-on-year consolidated performance for the quarter reflects a revenue increase by 2.8% of rupees 8,129 crores. The operating cost went down by 9.8% at rupees 4,526 per ton, a reduction of rupees 491 per ton. This is mainly on account of 21% decrease in energy costs driven by efficient fuel management. We achieved a 25% reduction in kiln fuel cost, now at 1 rupees 84 paisa per 1000 kcal, down from previous 2.45. With these improvements in revenue and cost, our Ebitda is rupees 1,732 crores, a jump of 70% YOY. The Ebitda per ton has increased by 65% to rupees 1,225, and margin expanded by 8.4 percentage points to rupees 21.3. We achieved 125% growth in profit after tax at rupees 1,090 crores, up from 488 crores, a jump of rupees 602 crores.
Well, that was the CEO of Ambuja Cements talking about the results. Revenue, profit, EBITDA all rose but missed estimates. Now let's move on to Sun Pharma. That also came out with its third quarter results, and that was above estimates, driven by strong sales in key markets such as United States. Monal Sangvi joins in with more on this. Monal, tell us a little bit more about the results of Sun Pharma.
Thanks, Smriti. Yes, the results were a beat. Net profit came in higher at around 17%, in line with estimates. Margin was around 27.07%, which again was slightly higher than the same quarter last year, and it also beat estimates. So overall good. Like you said, yes, it was aided by a great performance across geographies. So both US and India, that make up for around 65% of Sun Pharma's revenue, recorded a double-digit growth, with India revenue up 11% and US revenue up 13%. A slight weakness on the emerging market sales, but the rest of the world made up for it, and it was up 13%. Now, the CEO in the filing did hint at a new product called Nidlegy, and they're looking forward to that approval in Europe in the coming months. So that's one thing to look out for on how it develops. All in all, quite a positive for Sun Pharma.
All right. Thank you, Monal, for that. Let's now move on to Piramal Enterprises. A weak set of numbers coming in on that. Profit converted to a loss of 2,378 crore rupees. Meanwhile, NPAs improved marginally. My colleague Vishwanath Nair caught up with Jairam Sridharan, the managing director at Piramal Finance. Listen in.
On December 19th, RBI had come out with a circular that said that any financial institution that has exposure to alternative investment funds, if you also happen to have exposure to one of the underlying clients of the AIF, then you should go ahead and make provisions. We had made a stock exchange disclosure 2 days after that, mentioning that we had a little over 3,000 crores worth of exposure in AIFs. That's what we have dealt with during the course of the quarter. We had 3,500 crores of total exposure into AIFs. Of that, about 1,700 crores was linked to some sort of assets or accounts where we had exposure. We had a lot of debate internally, but then we decided eventually to write down the entire 3,500 crores just to be very safe and fully compliant. So we've gone ahead and taken a full 3,500 crore write down on our AIF portfolio, and that on a post-tax basis has resulted in about 2,700 crores of hit. That 2,700 crores, against that we have roughly 300 crores of regular profits, which is what gets netted off, and you end up with roughly 2,400 crores of reported losses that you mentioned in your opening remarks. So that's broadly what has happened. These AIFs, the 3,400 crores worth of write-downs that we have taken, good quality assets. Cash flow has been coming in from these assets. And so the accounting action that we have taken now of taking full provisions doesn't change the economic value of these assets at all. The economic value continues to be what it was before we did the action. We have already received 1,100 crores of cash flow from these assets in the prior periods. Just in this financial year, in the last 3 quarters, we have received 700 crores of cash flow from these AIF instruments. We expect that to continue in the quarters ahead as well. And now that we have written down that entire exposure to zero, all the future cash flows that come in from those AIF instruments will accrue to us directly through P&L. And we do expect almost all of that AIF investment to be recouped over the next 2 years.
That was the management of Piramal Finance talking about an exceptional provision that they had to make this time of over 3,500 crores after RBI came out with its AIF regulations. But moving on to Dabur, that has also come out with a positive set of third quarter numbers, with revenue growing 7% and expansion of margins. Sesha joins in with a qualitative view on this. Sesha, what were the highlights of this quarter for the company?
Right, so largely the numbers were in line with the analyst estimates. Our revenue was up 7% at 3,255 crore. Ebitda was also up 9.5%. Margin at 20.5% versus 20% was exactly in line with the estimates. And net profit again is up 6.2% over the previous year. Now, the key takeaway during this quarter was that rural demand grew 200 basis points ahead of urban. This is at the time when the rural demand is lagging urban demand for the entire industry. Moderating inflation, investments in distribution footprint expansion are some of the key reasons, the key factors that helped demand from hinterland bounce back. Now coming to the volume growth, domestic volumes X of the Badshah Masala acquisition grew 4% versus a minus 3% decline. The 3% decline in the previous year. However, including Badshah, the domestic volumes grew 6%. If we look at the categories, domestic food and beverages category led the overall growth. It grew 6.7%, under which the food businesses, including Badshah, grew 22%, while the beverage segment grew 7%. Home and personal care also grew handsomely, 6.6% growth there. However, delayed winter, hurt the healthcare segment, which grew just 3% over the previous year. Dabur has also said that 90% of the portfolio has witnessed market share gains during the quarter.
All right, thank you, Sesha, for that comprehensive highlights of the results. Let's move on to Adani Wilmar, that also came out with its third quarter results. As I said, big day for results. In the third quarter for Adani Wilmar, volumes rose steadily, aided by stable rural demand and distribution expansion. But the revenue fell due to lower edible oil prices, putting profitability under pressure. Volume grew by 13% in the 9 months of fiscal 2024, with broad-based growth across segments. MD and CEO Anshu Malik told NDTV Profit that the company has turned its losses into profit and are back to normal when it comes to Ebitda and PAT. Listen in.
From the quarter point of view, one, we have turned around from the loss to profit. So we are back in our normal Ebitda and PAT. Two is that the food business continues to grow at around 18-19%, but the domestic market is growing at around 40% plus. It's the export of rice that has taken a little beating. Otherwise, the volumes would have been even more. Third is that PAT edible oil has been showing a good growth, and up to this December, 9 months, edible oil PAT is growing at around 16%, which is quite good. Market share has gone up from 19.5 to 19.8 in oil. In mustard oil, let me tell you, we have been growing at 20% CAGR for 2 years, and that is the biggest domestic oil. So their fortune remains the number one mustard oil brand in the country. Wheat flour has been growing and market share has grown to 5.2%. So all in all the products have been growing. So Q3 has been very good.
We'll slip into a short break now, but an NDTV exclusive on the other side. Stay tuned. Welcome back. You're watching The Reporter on NDTV Profit. Let's talk about Vodafone Idea. The results were muted, but the management said that it plans to launch 5G in the next 5 to 6 months. Now, this is obviously on the back of the funding that has not yet come, but the company keeps saying that they are in conversation with the investors. The management refused to take any questions in the earnings call on the matter of funding. However, said that they'll roll out 5G. But But it also said that it'll prioritize vendor payments over capex for that matter. So any revenue or the money that the company makes will first go towards vendors. Now, the positive is for Industars here, which is one of the biggest vendors of Vodafone Idea. And as per its third quarter results, Industars overdue as on 31st stood at 5,700 crores. Now, talking about the 5G as well, Akshay Moondra, the CEO of the company, said that they'll take 5 to 6 months to roll out 5G after they receive the funding. And by that time, he said there'll be clarity on monetization of 5G as well. Currently, as you know, Jio and Bharti Airtel, the competitors, have rolled out 5G, but they're not exactly monetizing it. That creates a stress on the 4G side of it as well, because there is no quantitative way to tell how much 5G is being used. And the Akshay Moondra also talked about promoters' funding. Now, this Vodafone Idea said earlier, a couple of months ago, actually last year, that the promoter of the company, one of the promoters of the company, is willing to commit 2,000 crore rupees, which in comparison to the debt is nothing. If you look at the net debt of the company, that stands at 2.14 lakh crore. And the company also gave out figures for FY25 and FY26. Now, FY25, the debt payable will be around 5,400 crore, apologies. However, in FY26, when the moratorium for AGR payment lifts, the debt will be around 30,000 crore. Of that 30,000 crore, 28,000 crore will be in AGR dues. So we're yet to see how Vodafone manages all this. We're yet to hear from Vodafone Idea about their funding plans and how they plan to repay this debt in the next 2 years. So we'll keep a lookout on how Vodafone Idea fares, and if they come out with any more funding announcements, we'll keep you updated on that. But as promised earlier, let me bring you an NDTV exclusive. Northern Arc Capital plans to file for an initial public offering in the next 10 to 15 days to raise 2,000 crore rupees. This is the company's second attempt at listing, as it had filed its draft papers with SEBI in July 2021 but did not go through with the process. On the other hand, Blackstone-backed Aadhar Housing Finance aims to refile for IPO, according to sources to NDTV Profit. Saloni Kothari joins in with more on this. Saloni, what are you picking up on this?
Right, Smriti. So obviously, two financial services companies planning to hit the market in February, planning to raise combined, if you say, like 4 to 6,000 crore from for Aadhar Housing Finance Company and about 2,000 crore for Northern Arc. So that way, we'll see about like 8,000 crore worth of IPO filings by next month. Talking about Northern Arc, for that matter, it's an NBFC and they are planning to file it in the next 2 weeks. And they aim to raise about rupees 2,000 crore. Now, the number might differ because based on the OFS that they plan to come up with, the company does not have a promoter, as it's owned by multiple private equity players such as Leapfrog, IIFL, 8 Roads, among others. And the IPO is going to have a mix of fresh issue as well as OFS by these private equity investors. Now, I want to mention that this is at the time another example of many private equity players taking this IPO route to exit, at least partially, when we are seeing this market positive momentum this year and also last year that we saw. And ICICI Securities, Axis Capital and Citi are appointed as managers of the issue. Now, talking about Blackstone backed Aadhar Housing Finance Company, they are planning to raise about 4,000 to 6,000 crore with a mix of OFS and fresh issue. Now, that is also like a second attempt of the company to go for the IPO, as they had planned to come up with it in January of 2021, and they had gotten SEBI nod in May of 2022, but they did not go through it last year because they said the market conditions were not right. So now they had planned to raise about 7,000 crore that way earlier when they had filed, and now it's about 4 to 6,000 crore. So obviously a reduction in the size that they're planning to do. So lots to watch in how many companies are planning to tap the markets.
Well, yes, thank you, Saloni, for that. 2 more IPOs in the pipeline. But that's all we have lined up for you on this edition of The Reporter. But stay tuned to NDTV Profit. Lots more coming up.